You are live. Oh, what's going on, family? Back in the building, man. It's been about 30, 60 days since I really had to hop on here and bless you guys with some of these good wills and great tidings coming to you. Happy New Year's to the 2023 fam. Appreciate y'all being with me and checking in. I got my good brother, y'all already know, Winston Buckley on the stream with me. What's going on, Winston?
Oh man, nothing much. I'm enjoying 2023 so far. I mean, we only been in it 2 days, but so far it's been a prosperous year, bro. How about you?
2 days in, man. 2 days in, and 363 to go, right, or something.
That's
Check
right.
my math. Y'all know how I do with that.
That's right. Yeah.
But
At least
yeah, man.
about
I appreciate you jumping on with me. I know that we're going to kind of touch on for those listening. We're going to touch on basically what happened in 2022, some of the good, the bad, the ugly. What we can look forward to in 2023, and then also just the overall sentiment, right? Obviously, the overall crypto sentiment, but also the macro environment sentiment. What are people doing? What are people thinking? And what type of plan can we have moving forward? So I guess without further ado, Winston, I'll go ahead and just kick it off to you with this quick question. In 2022, what was your biggest surprise?
my biggest surprise of 2020. I think it was the same surprise for everybody. It was FTX blowing up. I really did not see that one coming. That was the biggest one for me. Yeah, man. What about
Yeah,
you?
man. I would say so because I was thinking back and I was on a Twitter space the other day and we were kind of going through some of the crazy things that happened. Like in January of 2022, OpenSea got hacked and they had that Wavern hack, and everyone was anytime you transferred anything on OpenSea, like that was a crazy hack. So that was a huge surprise. Obviously, the FTX one was the biggest surprise of them all. But not even mentioning all the centralized exchanges blowing up, Celsius, BlockFi, Voyager, all that craziness. I guess I would say, to not put it into those big terms of those ones, right? Maybe it would be for me the constant decline of crypto. We were so fortunate and so lucky to be in crypto in 2020, and it was just like, oh, it's just steady trending up. In 2021 is just blow off top. We had those huge drawdowns in like May of 2021, but then obviously at the end of 2021 in November, all-time highs again. Going even into January 2022, it seemed like, we dropped a little bit, but that's nothing. Laser eyes, 100K is coming, 100K is coming. And obviously that didn't quite work out. So I guess the biggest surprise for me is just seeing the steady, constant bleeding decline. And it's not so much that, I'm so surprised as in the price is going down. It's just more so I felt as though the adoption of crypto was going to have a stronger hold on its community, on the world. And because of that, maybe the price wouldn't go down so much. So I guess we can look forward to 2023 and see, if we do get some real world adopters, some of these projects that do have real world utility sticking around. So that's something to look forward to.
Yeah, man. You brought up something that made me think about just the realization of just how many visitors we had to crypto, and they'll be back. Tourism goes up and down in different places, and they'll be back. But it really showed like who's here to stay and who's here for the good times, and once the good times are over, who's out. And we know some of them personally. We've seen it. Also, reading just the headlines, like people that capitulate that you never thought they would, or corporations. But
Speaking of that,
yeah,
hold up. No, Michael Saylor sold Bitcoin. You see that?
I, I
Michael
know, man.
Saylor, the self-proclaimed "I'll never sell, take it to my grave," sold
Hey,
Bitcoin. Now, it is with the caveat, right?
I,
He
I
he
was
did
about
this.
to
He did it
say,
smartly. You know what I mean? Like, no, don't get it twisted. We do a little bit of our research here, right? It was with the caveat that obviously because crypto doesn't have a wash trading rule that, hey, I can sell this today and tax harvest. Which, if you don't know, for example, if you bought Bitcoin when it was 60K and the price goes down, it's currently 20K. Well, that's $40,000 worth of losses. So you can write off some of those losses on your tax year. And then you can say, hey, I still believe in this asset, and go back and buy it the very next day after you sell it, right? So it is something very smart that we should all take advantage of if we have the opportunity. But it was still a little shocking when we seen, Michael Saylor sells Bitcoin. It's like, hold on,
yeah,
damn, we really
right,
going down. Like, where my ledger
yeah.
at?
I know the headlines. Yeah, if you do not read to the bottom of the article, the headlines Yeah, do not react off and make your buy and sell decisions off a headline. Yeah, scroll to that thing. But you're absolutely right, man. And I think one of the things that's been somewhat damaging in our community is diamond hands and what that means. So it's like, even with that, we need to define, what does diamond hands mean and what does the moon look like? There is a point where everybody is going to sell. Like there's everybody has a price, and I think sometimes that is used by manipulators to say, yeah, y'all keep them diamond hands. I have my target. So, but you're right. You're right. He absolutely did that for that tax harvesting rule, and I hope some of y'all out there took advantage of that while it's still here, because that's going to get closed up eventually. With all the regulation that's coming, that loophole is going to get closed.
Yeah, and to kind of touch on a few different things that you said there, like firstly being like everyone is going to sell at some point, right? A big part of investing, if not the biggest part, is buying low and selling high. It doesn't matter what the asset is, whether you're buying a used car, right? You want to buy the used cars for cheap and sell it for a little bit higher. If you're buying a home, you want to buy the home for cheap and eventually, in 100 years, 200 years, whatever, sell it for higher, right? Same thing with Bitcoin. You want to buy it cheap, hold it for an amount of time that you think is worth it, and then sell it high. And I had this conversation with somebody else, and they were very against cryptocurrency, and it's all a scam, and blah blah blah. And he was speaking to a third party that was also in the room and saying, this is what they do. This is what these Bitcoin guys try to do. They want you to come in and buy it so that they can sell it. They just want to buy it low and sell it high. And I had to kind of sit back and just be like, okay, I can approach this a few different ways, right? So I didn't choose the violence route. I chose peace and prosperity, right? It's a new year. We're going to 2023. It's a year for gratitude. So I didn't want to come at them too hard, but I was basically just explaining that, yeah, the principles of investing are you buy something low and you sell it for higher. And then I explained my principles for investing in Bitcoin is it allows you to own your actual assets, right? And understanding blockchain technology and what that could afford us as a not only a what's the word I'm trying to look for? As a humanity, right? As a society, there are definitely things that will be impacted by blockchain technology. So instead of choosing violence, I just chose to keep it real peaceful with those types of comments. But another thing that you had said and you touched on was the fact that not only do people try to buy low and sell high, but at the end of the day, we all have a target. We all have something in mind, and everyone should have a plan. And so if you're investing in anything without a plan, you're already kind of half stepping. I'm already looking at you a little sideways, like, okay, like you're buying this because why? Okay, cool. And you're going to sell it when? All right, cool. And if this happens, you're going to do what? And that is the simple terminology of what a plan is, right? Like, oh, I'm going to buy it here. I'm going to sell it here because of this. And my thought process is this. It's like, okay, you have a plan. At least you have something to go off of. So I just wanted to kind of touch on those 2 points that you made, because I thought that they were definitely imperative for people to understand and move forward with into 2023.
Yeah.
Did you get to do any tax harvesting yourself?
Allegedly.
Allegedly, folks. Allegedly. I ain't saying nothing.
Yeah, man. Yeah, I don't even know if I own any crypto, man. I don't even know what you're talking about, bro. No, but no, there were some things that I had to sell. Unfortunately, my Luna was so low that I couldn't even get it off the exchange. It was they had a minimum amount to trade, minimum. So I'm just looking at that. It's a constant reminder of the market, and to not.
Oh, I'm sorry. I didn't mean to cut you off, but I was just gonna say, like, dang, I was just thinking back to Celsius, BlockFi, Voyager, FTX, all these things. I forgot to even mention Luna. Like, I didn't even wait. That was 2022, bro.
That was 2022, man. It's so crazy.
Do Kwon, I've seen Do Kwon up on videos. He all in the videos, all in the media. In Singapore, I don't know where he's at, but he's out here just living his life. And I ain't mad at him, like, hey, sometimes you create things and they fail. It's not like you intentionally did it. And then all other times there are intentional bad actors that are doing illegal things, and knowingly so. So, it is what it is, right? We're in the cryptocurrency space where everything is so new, so nascent, such a small industry that these types of things will probably continue to happen. It is about educating yourself and kind of being prepared for them, so that way you don't continue to look silly. Yo, shout out to the homie Zach real quick. My guy. If y'all don't know, man, look up Zach either on Twitter. Zach, drop your Twitter and I'll put it up here as well if you're still in here. Really good dude, runs his own Discord. helps people out, teaching them how to do drop shipping and different ways to make money outside of cryptocurrency. Also, really knows the stuff with NFTs. So shout out to my guy, Zach. Appreciate you tapping in with me, my brother. Drop your Twitter if you want, and I'll post it up here, see if anyone can give you a quick follow. Oh, there he is right there. You already know. So ZSOADS.eth. You already know. Yes, sir. Appreciate you, my boy. But yeah, Winston, sorry to go off that tangent. You know, we got to show love to the family anytime they pop up.
Always.
But yeah, so if you wanted to, I guess we can kind of get in and start showing off some of the topics we're going to touch on. And it's really just going to hop on here for, 20, 30 minutes and just go over what we think is happening in the markets and where things might head out. So without further ado, my guy, share your screen.
Yes, sir. Yes, sir. All right. So I hope y'all can see that there. Yeah, I just wanted to start on crypto bubbles here and just kind of take a look at what's going on, where we are. So this is a snapshot of the week. So we got some green. It's kind of crazy what's green compared to, what was green at the beginning of the year. But if we go back about a month, and then just since we're talking about 2022, just capping off the year, man, this right here is just so crazy. Just to even think that if you would have told me at the beginning of 2022 that we were just going to see 75 to 99% down across the top 100, I'll be like, man, you tripping. But, we've been here since before the last downturn. So we know it's possible. And we all knew it was possible, man. So when you see this sea of red with little dots of gray, man, what you think?
Well, it's funny, right? Because for those that don't know, Winston and I linked up during the EYL run, Earn Your Leisure, in early 2020. They were coming out and they were really just taking the internet by storm, and they were everywhere. And then we had the president of the Earn Your Leisure Crypto Club, Alistair McKenzie. Shout out to Al. He was there doing some classes, teaching people about crypto and just kind of helping people understand what the asset class had. Winston and I just kind of would chime in here and there. Alistair decided to bring us on. We created a little team and we would create content every week, right? Just putting out crypto content. And during that time, we tried to express to people like, hey, it's going to go up, but are you going to be prepared for the downside, right? Are you ready for both sides of the story? There's two sides to every story. Are you going to be able to stomach the swings? And at the time, everyone, man, yeah, I ain't worried about that. What? I'm riding this to the moon. Doge's about to go pop it. I'm about to get me a new, And now, when you look at it, people are like, well, I just think it's a scam. And, I should have listened to my brother-in-law, and my sister's mother's cousin had told me that back in 2017, this same thing happened with, like my man said, they wasn't ready. You know what I mean? People was not ready for these drawdowns. And fortunately enough, like you said, I've been in crypto for long enough to see some of these things already happen and to be mentally prepared, right? It wasn't so much just, hey, buy. When I first got in, it was just buy, let it go up. Okay, I'm rich. And now the second cycle, when I really got into crypto, it was understanding blockchain technology, understanding, why is the token, what are tokenomics? Why is this token going up? Just because, what utility does ApeCoin actually have for the Bored Ape Yacht Club universe, right? BNB, obviously that's the token that used for their gas on their blockchain, but what else does it use? XYZ, right? So really understanding that's probably my biggest thought when I see this. That's the first thing that pops in my mind. Like Zach said, they weren't ready, right? But I guess if you look at it, so everything is pretty much down anywhere from 75 to 90%. You have a few cases like Luna down 100%. Even your boy Richard Hart and Hex down 91%. So there's a few things like that do stand out. So TWT is Trust Wallet token. So the Trust Wallet, it's up 128% on the year, which is crazy when you see how down everything is, right? And it's simple. That is a product that many people are using, many people are adapting, and the use case for its token isn't being conflicted with other things, right? A lot of times they'll be like, oh, well, you can stake it, but then you could also use it to do XYZ. And then, if you do this and that, it's a Ponzi-nomics, right? It's a lot of Ponzi-nomics. And instead of Ponzi-nomics, it's just something that is just trying to work and only accomplish one single goal. Not that tokens can't accomplish many goals, but it's best to figure out what it accomplishes first and foremost before it goes on. All right. So what else do we have on here? Let me just point out another one was GMX. So GMX, the decentralized exchange, it is actually still up, I think, like a little bit over 100% on the year. I'm not sure. But that's a huge one. And it trades currently on Bybit. So I've been really, really watching GMX. And I guess I'll do another video of that. But GMX is something to keep an eye on for many different reasons. I'm not too familiar with BGB, but
Yeah, I don't
guess
know.
we don't have to.
Yeah,
Not sure what that one is,
sure.
but
Might be an anomaly. But yeah, man. I think you pointed out two really good things on trust wallet token and GMX. You know, the narrative when all these centralized exchanges blew up, then a lot of people switched over to DeFi. And like the representative said, I think his name is Tom Emmer. I don't know if I got that right, but he said decentralization is the point. So he's one of the guys in Congress that are really fighting for blockchain and the technology and what it can do. But yeah, it's like looking at this, like we can look at the narrative and see what's going on. I know a lot of people are like, man, I don't know what none of this stuff is, but yeah, we can kind of look at a chart like this and just see. And man, you brought up Hex, and it just really speaks to both in decentralized and centralized, especially for centralized. You know, we have to be careful with just following founders and just believing in the founders themselves because, you know, they're fallible and that has nothing to do with what the token is going to do. You know, sometimes it does, you know, because they some of them just outright scammers. But, you know, a lot of people are just still hanging on. And I'm not just picking on him, but well, I kind of am because he's just so flashy. He's just like, anytime they ask him, like, well, is this a Ponzi? He's like, everything's a Ponzi. Like, what is it? You know, that's kind of like his response there.
So, it's funny, you know, I actually agree. I agree with Richard Hart on like, he makes a lot of good points. Like I've listened to him in multiple videos and like, I'm like, okay, I could understand why someone would believe in this guy. But at the end of the day, he controls, or well, he doesn't claim, but you know, somebody controls the keys to over 90% of all the Hex tokens. Like one person controls that. And like you were just saying, like you said, the senator, again, sorry for your name, Senator. Shout out to you though. Decentralization is the point, right? So if one person controls 90% of the tokens, it can do as they please. It's probably not the look. It's probably not the look. So that's I'm glad we kind of pointed that out. All right. So obviously we kind of touched on the tokens. All the tokens are down, big down. You know, some are going to bounce back, some won't. So please be aware of that out there. As you kind of go through a few, I'm not even going to talk about a few I like right now. We'll wait till the end for that. But what about NFTs, Winston? You've been checking out anything with NFTs? You've been thinking about anything with NFTs? What's your thoughts?
Yeah, man. So I had to do just like any portfolio manager would do, anybody in your personal life would do. So what did a lot of corporations do, even starting in 2021? So I should have heeded, man. We talked about the All In podcast. I always mess up the guy's name, so I'm not going to say it, but he was just pointing out.
Polyapatia?
There you go, man. It rolled off your tongue so well. But yeah, so he talked about the smartest people in the world are selling some of their own stock. A lot of them are paying off their debt. And he was just like, you know, I don't know if there's any more clear signs than this. You know, I'm paraphrasing, but basically that's what he was saying is like, if you think that you're smarter than the smartest people in the world, then good luck. And it's just like, man, if that wasn't one of the biggest, there were so many top signals, you know, we had people coming off the pole and then promoting crypto. Like it was so many top signals out here. It was just absolutely nuts. But that was one of them. And so with NFTs, circling back with NFTs, you know, I had to dump some of them. Some of them, you know, I plan to have Diamond Hands. But what's so funny is I actually sold the NFT that was called Diamond Hands. And I'm so glad that I did because it's down 90%, like many of them. But, you know, just kind of looking at, oh, this is 24 hours. So maybe we can go to all and just kind of see like who the top 10 are now. And it's pretty much the usual suspects over the past.
Yeah, the big ones are sticking around. And obviously most NFTs are down. And shout out to what you said earlier about that all-in clip, right? So Chamath basically said in November of 2021, I remember it so vividly because I actually made a tweet off of seeing that clip. And the tweet I made, I had pinned for a very long time. And it said, I posted a picture of the chart and I said, hey, if you guys are up X amount of dollars, maybe you should take some profits. It's not a bad thing. Maybe you should, if you're up 50%, maybe take 20, 25% profits. Now, personally, I was up way more than 50%, like way more. And I did not take 50% profits. So I did take some, but I didn't take enough. So that clip just stuck out so clear to me because, again, he was saying, the smartest people in the Bezos has just sold X amount of his stock. Elon has just sold X amount of his stock. I am telling you, I just sold X amount of my stock. And not only that, I'm also giving money back from Spock acquisitions that he brought to the table. So I think Spock special purpose acquisition, something. And so he actually took money for his Spocks and told people he was going to be returning that money because of the economic outlook. And, at that clip kind of drove me to do a deeper dive and to take some profits. But I was just like, yeah, well, just in case he's wrong, let me go ahead and leave some of this money in here because I'm up right now. So, and then we just seen this onslaught, this freaking roll bounce. Motherfuckers was diving and weaving down this sled because it was just like down 10%, another 10%, 15%, 20%. Another 10%. And it was just day after day, month after month from November of 2021, a continuous slide. And that's kind of what I said, when the very first question, what were some of our surprises that we had? It was just how much crypto would continue to just slide and slide and slide and slide with really no hope in sight, right? Like, as far as from my point of view, no real hope in sight. The only hope that I had in sight is the fact that I know the long-term game, right? I know the long-term outcome. So I'm okay with, I prepared myself. Like Zach said earlier, they weren't ready. I was ready, right? I had mentally prepared myself for something like this to happen. Now living through it is the time to take action with it. And so with some of these NFTs that, as I kind of circle back to this topic, a lot of them are big down, but I think there is still some potential. If you look at NFT volume recently, the volume of NFTs, I don't know if there's a tab with volume on there, but over the past like 90 days, the volume of NFTs has actually increased a bit. There has been people buying. So some life is being breathed back into the market. But honestly, I would say it's pretty much all for naught, just because at the end of the day, we are heading into 2023. Definitely a time for gratitude and to reflect on how appreciative we are to actually be able to invest in these things. But a recession is looking like it's on the horizon. So I don't know, Winston, have you seen any like recessionary news, or have you seen any headlines, or you haven't seen anything like that?
Are you talking about with just NFTs or just in general?
I would say in general, obviously I know we both watch it. We try to stay abreast of the market. So I said that a little, facetiously, because I'm assuming that you've seen something along there. I know you got a lot of tabs up there. I don't know if maybe you had a tab that was talking about, some of these things. Yeah, there we go.
Yes, sir.
This is my type talk right here.
Yeah, man, this actually kind of tied. I know it might seem like a hard pivot, but this actually kind of ties right into NFT volume. So this right here is the personal savings rate. And this right here can be overlapped. I think there's another tab that has the money supply on it. But if we just go from 2015 to 2020, obviously that's when the pandemic started. But that's also when stimulus came in and that money printer went on. So savings rate went up like crazy because, man, we didn't have anything to well, we had a lot to spend money on. A lot of people were spending like crazy, but a lot of people were throwing money in the bank too. So people were paying off debt. People were saving money. People were buying and spending things. A lot of them bought crypto and NFTs and this and that. So, man, this is kind of like with the NFT volume and with the NFT prices and the hype and the speculation. Like, man, we could overlap this chart right here just with the crypto market, with the market cap of NFTs for favorite projects, and all this is directly tied to the money supply overall, personal savings rates. And just skipping ahead just a little bit, but this is also just the outstanding credit card debt. So that's been going up. So if we go back, savings rates has gone down over the past couple of years, as opposed to credit card rates going up over the past couple of years. And what's in common with this? Money supply. So money supply is starting to go back down. Credit card rates are going back up. Saving rates are going back down. So, we're talking about the NFTs, and, I'm selling NFTs. You were talking about what Chamath was talking about. People are paying off debt. They're selling off their stock. For what reason? People are going to risk off. Everybody's risking off. So, NFTs are like at they're going towards the far end of risk, right? You got
They're at the
NFTs,
deepest. They're at the
DeFi.
deepest end of the
That's the
pool.
far end of risk,
Exactly. Now, NFTs are definitely at the deepest end of the pool. And when you speak about like the money supply, really it's like the velocity of money, right? Like how quickly is this money actually being moved through our systems, right? Because for example, I could have $100 in my bank account, and if I spend $10 every day, well, guess what? I'm gonna have $0 in my bank account in the next 10 days, right? But if I know, like, hey, I have this $100 here, and I have to make it last me a month. Now, okay, like I might do the math. Okay, I can spend $7 a day or whatever, or I might just say, hey, for the first week of the month, I'm not gonna spend $1. I don't care what. I'm gonna be hungry. I'm gonna be thirsty. I ain't watching no Netflix, whatever the case is. Like I'm just not gonna spend any money. And right, so that slows down that velocity of money, which starts kind of drying things up. And exactly like Winston said, right, when the velocity of money is fast, it's everywhere. It's like an ocean. That thing is just swaying back and forth, right? But when the velocity of money is slowing down, it's like a pond in the desert with the sun right on top, right? From the edges just start drying up, and you end up with this small puddle of water compared to this huge ocean. And in my eyes, that's where it looks like 2023 is headed. And we've already kind of transitioned from that big ocean of money just going everywhere, every which way, the liquidity of it, into now, especially what you're saying here with like the savings rates as well as the credit card usage. What's it called when they go the opposite the ways? Inverse. There we go. Hey, boy, we learning all types of shit today. So right, so when you have the savings rate and the credit card usage inverse and basically moving away from each other, then that is a scary time because people are saving less, obviously spending more on their credit cards. And where is that going to leave us? Where is that going to leave the overall economy? So that's something, I think I just to double tap what you were saying, to double click what you were saying there, Winston, where, the people that are taking the time to pay off their debts, to make sure they don't have any outstanding debts, or they don't have any, they don't owe Peter, they ain't got to rob Paul, they ain't got to call Susie and all this nonsense. They're going to be able to take advantage of any decline that comes in throughout 2023. So a lot of people are calling for a recession, and the people that are using more credit card debt and not saving as much are going to have a tough time taking advantage of these wonderful opportunities, as Warren Buffett would say.
Yeah, absolutely. I mean, if we just really just think back to what caused the 08 crash, like what's causing this upcoming recession that may come, it's always the same thing. It's just like, man, humans never learn. We do the same thing over and over again. We overspend, don't spend enough. And it's unfortunate because it's like we personally know people that are negatively affected by this, right? And so these people are forced out of their homes, and they have to sell off assets at a discount at the worst time. So it's just like we have to, and I'm jumping the gun here a little bit, but just like a business would, just like a government, a country, we have to make sure that our financial house is in order. Because if you're down to your very last and you have a bill that's due and you have this investment over here, it doesn't matter what kind of diamond hand you are, like you're not going to starve. Like our stomach is going to make us do things, whether it's legally or illegally. I think most of us want to do the legal thing first. So if you have something that you can sell, I got this crypto here. I know it's going to be something that's going to change my family tree, but I have to pay my rent. I have to pay my mortgage. I got to feed my kids. So that's why
I got to feed this family tree first.
We got. I know that's right.
You know what
if
I mean?
I don't feed this family tree, it's going to be dead. So now you're absolutely right. So it's one of those things that, offline, we were just talking about things that we were doing personally, but man, just we implore you all to get rid of the debt. Like, run, have that gazelle intensity to get out of debt is so important. It's so important because it's a killer. And man, that was a kind of a great segue, just talking about what may or may not be coming with the central banks. And this is Europe's central bank, but it kind of echoes the sentiment for a lot of central banks around the world. But they're basically saying they're staying course, and the course is quantitative tightening, demand destruction. Like, we got to tamper down inflation by whatever means. And it may be a pivot, but a pivot just might mean a pause. So, I think a lot of people are saying, oh, the the feds are going to pivot around the world, but that might just mean, okay, we just going to keep rates here for a year. So that's still not the greatest thing, you know?
No, I 100%, 1000% even agree. And like a lot of people are expecting this pause / pivot to happen very soon. They're like, oh, don't worry. And the next FOMC meeting is January 31st, February 1st. And, they had been raising 75 rates, right? Then in December right now, they only did 50. And now in January, they're like, oh, they're only going to do 25. And then they're going to probably just do nothing. Or maybe they only do 25 again. It's like, no big deal. And by the end of this quarter, it'll all be good. And I'm like, okay, well, that's a possibility, right? That you don't want to rule out it saying it's not going to happen. But at the end of the day, usually the most pain is what occurs, right? And so what is going to bring the most pain is the fact that everyone kind of thinks that what I just said. They all think, oh, this is what it's going to be, no big deal. And then come to find out when you turn around, oh, actually, we do 25 in January, we do 25 the next month, and then it goes back up to 50 and back up to 75, right? Because if inflation isn't on its way down and unemployment hasn't started to rise, then they will continue to raise rates, right? That is what it is. There's no surprise there. And then I'm going to try to find here a quick chart. So I follow Wifey Alpha. And so for the people that don't know, you should definitely check out Wifey Alpha. Is literally just how it sounds. Wifey Alpha is an account on Twitter. They cover a lot of macroeconomics. And I'm like a big believer in this guy. As you don't want to follow everyone exactly, but he just puts out some great information. Unfortunately, this fool tweets nonstop, so I'm scrolling his page right now trying to find this last chart that he had put out. Here we go. Okay, boom. Now let me go ahead and do this. Give me 1 second, folks. Share screen. No, you can still do it because it'll still I'll just put mine over yours. Oh, there we go. All right, so let me see. Do I need to zoom in here? This is the chart. Let me see if I can zoom in. No, I can't. Unfortunately. All right, well, you can see this tall teal line right here, right? And so the dark blue is the magnitude by percentage, and the light blue, the middle one, is months from peak to trough, and then the teal one is months to get back to previous peak, total duration of correction since previous peak. And so in this first column, the first on the left-hand side here, you can see the recessionary bear markets. So in a recessionary bear market, which we are currently in, if you think about it, right? We're heading into a recession and we're definitely in a bear market. Out of all the recessionary bear markets since the 1300s, during a recessionary bear market, at the max it takes is 129 months to get back from the previous peak, from the bottom to the previous peak, right? So that means that, let's say, for example, Bitcoin, Bitcoin's bottom was 15K. Like, I don't know. I'm not saying it is. We're just using this as an example. So for Bitcoin to get back from its previous peak of 69K, it could, not saying it will, it could take up to 129 months. That is about 10 years, right? And again, when you think about that, with the fact that cryptocurrency has never been around now it was around during the 2020 recession, but quantitative easing came in and pretty much took care of all that, right? So through an actual extended recession without quantitative easing, cryptocurrency has never been around. So this could be the big one, right? This could be, you need to be in it for the long haul. I'm not saying that Bitcoin won't increase in price. I'm not saying that it's not going to eventually get to new all-time highs. I'm saying that at the worst case scenario, from the data that we have since the 1300s, most assets during a recessionary bear market could take up to 10 years to reach their previous peak. And so just like we were talking about at the beginning of this call, where like where's it at? Let me get the they wasn't ready, right? Just like we were talking about back then, we are trying to just help you be ready. If you think, Bitcoin's going to be back at all-time highs at the end of this, by 2024, because it's the next halving, and that's how it always does. It's a 4-year cycle. These guys are crazy. They don't know what they're talking about. I know all that stuff too. I'm not saying I'm not thinking about that as well. I'm saying, let me take the biggest picture I can and prepare myself for all possible outcomes, right? What are all the different possibilities so I can prepare for them? And what we just say previously, what happens is usually what is the most pain, right? So what is going to give people the most pain? And this could, a 10-year waiting period could give people a lot of pain. So Again, check out Real Wifey Alpha is the Twitter. And let me just go ahead and shout them out real quick and put their thing up there, because everything is pinned. If you really want to do the work and you really actually think you can do the work, just go ahead here, Wifey Alpha. You can go through all his pinned tweets with all the research and do the work for yourself. But I just wanted to share that and shout that person out, because they really have helped me out a lot in just better understanding macro markets and also just being prepared for all outcomes. So sorry to kind of go through that whole diatribe there, Winston, but
Nah, man, that was excellent, because it also gives you some comfort in what you're investing in as well. So if you're just following just random people that's just talking about to the moon, and you're in the crazy echo chamber where all they're talking about is up to the right, but you have like no kind of understanding of how these markets move, like what factors will affect this, especially macroeconomic and micro in certain cases, factors that will affect this. It gives us comfort. So yeah, it's down. Of course, looking at the portfolio, it just hurts so bad. But you're like, okay, I can sit in this for a while knowing that, okay, there's a possibility that it could be 5-10 years. And so, man, that's awesome. I'm glad you shared that. We got to do the work. Like, easy money is not it's not here.
Exactly. It's really the easy money is not here. We're not, and it's just the economic conditions that we're in, right? And it's like, it's so cool, man. 2023 a year for gratitude. I'm so grateful for crypto, because I would not be on these type of calls, having these types of conversations with people that I respect, such as Winston, if it weren't for crypto, right? If it wasn't for me doing the work, finding other like-minded individuals that do the work and be like, oh, you do the work, I do the work. Hey, let's talk about doing the work, right? So it's as I'm so thankful for it. But all right, man, I didn't mean to cut you off there. I didn't know. Do we have a couple more slides that we want to get to before we?
Yeah, we sure do, my brother. All right, so just going back to what the Feds are doing, it's kind of echoes the sentiment of Mr. Powell here in the States. I think he doesn't want to go down as the Fed chair that couldn't tamper inflation. So I think they're going to do whatever they're going to do, and report after report, like with payroll and wages and jobs, they're still up. And it's so crazy to even think about it this way, but they kind of want this to go down because if more people have more money to spend, they're going to keep spending, which is this cycle. It goes back into the economy, keeps inflation high, so they want that destruction there.
That and just to really quick to really bring it home for people that don't know this, or maybe they just don't realize it, right? So when inflation goes up, the way that we fight inflation is by less spending, right? You have to crush demand. So if I'm still demanding to go out and get that PS5 and to get a new Oculus and to get a new microphone, if I'm still I want this, and I'm still spending, then inflation is going to continue to increase, right? So how can the government fight that? They got to take some things away. And the way for them to take those things away is by raising interest rates, which in turn causes businesses to have to spend more money. When the businesses spend more money, they're like, hold up. They don't think like me and you, right? I want this microphone, I'm gonna go buy it. I want the PS5, I'm gonna go buy it. Smart, well-run businesses are like, yes, we do want to increase maybe our market share here, but we know that right now is not the time because of XYZ, right? And so they start going on hiring freezes. They start laying people off, which in turn causes people to have less money, right? Overall, the economy has less money to spend. Like we were talking about, the velocity of money slows down. So as for inflation to come down, unemployment basically needs to go up, right? They're not directly correlated, but they pretty much are, right? If inflation is high, make people go on unemployment, because then they won't have any money to spend. Since they don't have any money to spend, inflation comes back down. And so just to really kind of double tap, like I was saying, I don't know why I've been using the word double tap so much in this call, but just to really focus in on what Winston was saying there, right? It's like really the Fed is trying to continue to hike rates so unemployment does start to go up, because as unemployment goes up, people will have less money to spend, and therefore inflation will come down. So
yeah, man. No slide, man. That was excellent description there. No slide to really talk about this, or no article to talk about this, but some of the things that are a part of the monster that the Feds are trying to beat back is, so we got some stuff that's coming up. China's starting to open back up, and China is the second largest world economy, if I'm not mistaken. So you got all these people, and they, we're in the U.S., so we have been fortunate. I'm in Georgia, so we one of the freest states. When it came to the pandemic, we closed for 2 minutes and we was right back outside. So I know you're on the West Coast, it's a little different out there, but the West Coast had nothing on, East Asia and what was going on out there. So like these people have really been inside for years, and they're starting to open up their economy. Japan started opening up towards the end of last year. So you got all this demand and pent up money that these people have. So it's going to be interesting to see how these Federal Reserve banks across the world are going to react to all this new demand. These people want to travel, people that haven't been able to go to East Asia, we want to go there too. So it's just like, man, there's going to be this uptick of spending, even if it's on it. We saw the credit card rates are going back up. People are like, look, I'm in Georgia, y'all. So this sounds crazy to me. Y'all probably know people personally, but I know people that are just like, oh, I just went to the movies for the first time in 3 years. Oh, I just went to a restaurant for the first time. So you got people that got bags. They have their stimulus money. They didn't go buy a Louis bag. So they like, I've been sitting on my bag for 2.5 years. I'm about to go out and travel.
And that is so true. Like, so basically, again, shout out to Real Wifey Alpha. This is where I picked up on some of this stuff. They were tweeting about it back in August or October. They were saying that the West wants to lower inflation and is tightening until financial stress, then it starts stimulating again, right? So for those that don't know, we as the U.S. are the West. So we want lower inflation, but we can't have it because, again, unemployment is not going up, right? The East knows this, the East being Russia and China. Russia holds hard assets, so they hold hard assets that they can liquidate for cash, right? And China has unlimited QE because of the lockdown that they've been on. And so they have low inflation and a lot of money to do quantitative easing because of the actual lockdown they've been on. So for us in the West, in the US, it looks pretty rough right now because, right, we've already kind of like, what analogy can I give here? We've already been playing the game for 48 minutes, right? For us as basketball players at the USA, we've been running for 48 minutes, crossover, step back, Curry, been doing all types of crazy stuff. But motherfuckers is tired, right? Sorry for laying. People are tired, right? We can't continue this pace up. We've been playing the game already for 48 minutes. We're going into overtime compared to Russia and China, who are just starting the game, right? They are just coming out. They're fresh. They haven't even finished their first quarter of the game yet. And so because they have the possibility to do QE and because they still have low inflation, it's going to be harder and harder on us in the U.S. to maintain our current level of lifestyle without, something breaking in the economy. So that's something big. And that circles back to the point of what Winston and I were talking about like, try to pay off all your debts right now, try to get out of. Now is not the time to leverage your credit for money. Now is the time to pay off anything you have. So in a few months, maybe even a year, you can leverage that credit that you have to go out and to buy something back and really use it. Right now is not the time to be using credit cards, right? What is credit card? It's leverage, right? It's giving you money that you technically don't actually have. Like, oh yeah, you're going to pay us back. We trust you. But that's just a form of leverage. Right now is not the time to be using any type of leverage. Now, me personally, I use my credit card every month, but at the end of every month, I pay it off. Right. So if I spend $1,500 on my credit card, I go into my bank account, I pay that $1,500 off. So I'm leverage free. I don't have any debt sitting there right now. Last time I'll say it, but right now is not the time to use your credit leverage in any case because of the uncertainties from the East being Russia and China and from how we, the West, are going to handle what's to come. Also, another thing I want to point out, I touched about it previously, Winston, was the SPR, the Strategic Petroleum Reserves. So we as the U.S. have been using our SPRs. We've been depleting that, running it down. So now we don't have any petroleum reserves. Okay, well, Justin, why do I care about petroleum reserves? Well, if we don't have any, we got to go buy them from somebody, right? We got to go buy that oil and those reserves back. So most likely we're going to have to reach out to those countries, China, Russia, XYZ, to buy those things. And that is going to cause us more and more stress because those countries will be able to kind of set the price and set the tone of how much those things cost. And even though we live in this crypto world and we had all this craziness going on, I'm sure y'all remember about these high gas prices that happened in 2022, right? I'm sure you might remember about Germany not being able to heat their country or their schools because of, not having enough oil reserves over there. So, I'll chill out on the rant and going further into that, but just something to really look forward to in regards of, how does the U.S. handle the lack of SPR? That could be a little Google homework assignment. I don't give out homework. I'm not a teacher, but if anyone wants to look further into it, there you go. All right, Winston.
Yeah.
Sorry, man. I didn't mean to cut all there.
Man, it's all connected. It's all connected. I mean, so just like we were talking about with companies, corporations, individuals, we need to follow what the big dogs are doing, and we need to emulate a lot of those things. So yeah, if you have a lot of extra cash, it might be the time to go get some NFTs on sale. So, I don't want to say don't do, anything right now, but yeah, like just was saying, this is not the time to take a risky play with your credit card to go buy an NFT, because right now, people are capitulating. I mean, it's amazing what's going on out there as far as capitulation. And yes, some of your favorite projects are down 90%. They can go down another 50. Like we have seen this. We have seen this dog and
this
pony
movie before.
So,
yeah,
man, it can get really rough. Now, I don't want to just say all negative. Yeah, we got a little more negative stuff to talk about, but there are some silver linings. There's some bright spots there. There's always a bubble somewhere. Like it's always a green market somewhere. But it's a lot of stuff that we do need to be aware about and to see what's going on. So this could be a bright spot. So just speaking about NFTs and metaverse, I think one of the realizations over this past year and the year before is that the metaverse isn't quite ready. So, there was kind of like a rush into virtual land, virtual worlds, metaverse, and NFT. But truth of the matter is, for most people, it's just not that great of an experience. I mean, even for us that have tried the Oculus or, have an Oculus, after a while, you're like, okay, I need to take this thing off my head. It's hot. It's just the tech hasn't caught up to where it needs to be. So if we think about the internet, if we go back to Amazon, for example, early days of Amazon stock, like it went down 90%. In the early days, the internet caught up, the accessibility caught up to what Amazon could offer, and it went crazy. So I think we can kind of think about metaverse like that. So quick tangent, quick rant on that. But over in China, man, we're just talking about what China is doing. China is doing a lot outside of opening these virtual assistants. So, some of us use like Fiverr for virtual assistants, but these are truly virtual assistants. So here's this example here of this pianist in China with a virtual singer, so a virtual performer. And so entertainment is one of those things that can be a catalyst for so many different areas. Like people will spend on entertainment even when the economy is down. Like people are gonna spend money to feel good, and that's like so many studies show. Like, okay, I might be down in my last 10, but I'm gonna spend 5 on spending good, going out, watching a movie, whatever. And this is one of those things that might be a catalyst for the metaverse.
100% agree. And like China has just so much going on, and I don't want to reap on them or die. I don't know. There's a lot of speculation what could be happening over there, but I just think it's important to stay abreast of what's going on outside of the U.S., right? Because a lot of these things that happen will be foreshadowing of what's to come. And if you can read between the lines, you can prepare yourself a little bit more. And like we've been saying nonstop throughout the call, it's best to prepare yourself. So, all right, Winston, I know we're starting to get here to the end. Was there one more thing or a few more things? Any other tabs that we got up there?
Yeah, man. Let's see if we had to choose one last one, maybe central bank digital currencies. Maybe that's something that we could just touch on and just see what's going on out there in the world. So I'm sorry. So this is just kind of shows like what's going on with central bank digital currencies, so CBDCs for short. But if I'm not mistaken, about 95% of developed nations already either have one that's in testing. Some have already put out. So like right here, it says 11 have been launched. 17 are in pilot status. Some of them in development and research status. That's where we are in the United States. I think we're a little further along than we like to admit. But Some of the countries, like for example, Nigeria, they put a limit on the amount of like actual cash you can withdraw every week because they want people to use their CBDC. And then, of course, China's going to do something similar, but you'd be surprised. It might happen in the States. I know, we are one of the more freer nations in the world, but we saw some stuff in Australia, around the pandemic and like the lockdowns and stuff that was happening there, like some stuff that you never thought that you would see in a quote unquote first world country. So, not to scare anybody, but CBDCs are here. They're coming to other places, but it's probably something that we will be using and, should expect to see in 2023.
Yeah, I would agree, man. CBDCs, again, for people that know, central bank digital currencies, those are extremely important. I remember I knew what a central bank digital currency was before I knew that it was called a CBDC. Winston had called me up and he was like, yeah, man, I don't know, these CBDCs, blah, blah, blah. And I was like, oh, we were talking probably for like 5 minutes. And then I'm like, yeah, man, hey, yo, by the way, what's a CBDC? He was like, oh, yeah, like a central bank digital currency. Oh, yeah, nah. See, I did know that. So, we've been talking about them for a while. We know they've been in development, and we know that they give another level of control that the government really just wants, right? Like, if I can say, hey, you make your job, your money at your job, but we're going to give you free $200 a month to spend on groceries. And with that $200, when you get it, you can literally only spend it at, I'm in California, so let's just say Albertsons, Ralph's, Vaughn's. Those are my grocery stores here in California. But you can only spend that at approved grocery stores, right? And so that's like the first little nibble they give you. And then they say, okay, well, now we're going to actually change your paychecks. You're not going to get your paycheck anymore. You're going to get your paycheck in a CBDC. And okay, no big deal. Now you still get your $200 free to go spend at the approved grocery store. And now you also have your regular dollars from your paycheck that are also under CBDC. Okay, no big deal. But now, a few years down the road, they say, okay, you get your $200 to spend at the grocery store, you get your paycheck, but 10% of that paycheck has to be saved and can't be spent. You're like, what do you mean? So what? Or they say, oh, well, you got to pay your taxes with the CBDC and you have to pay them on every week. So imagine having to pay your taxes not once a year, but every Friday, you got to pay your taxes, right? And so there's different levels of control that CBDCs will allow for governments. And it's just something that we all got to be aware of and stay abreast of those situations. So, any thoughts there, Winston?
Yeah, bro. I hope, I just hope we don't have like a 1982 situation, that book, that movie, something y'all should look into. And, I can have my tinfoil hat moment. So, that's a whole another rabbit hole I can go down. But yeah, they're coming. I hope it's not used for abuse. We should know about currencies, period. The US dollar is not the first US currency. So they fail, and they fail for a reason. Debt is one of the big ones. We have a lot of debt. So, maybe it'll last in our lifetime. Maybe it'll be beyond, who knows? But if a country wants you to use something, you're gonna use it, and that's what it's gonna be at the end of the day. I think we might have joked about it before, but I remember when debit cards came around, and my mom was like, "I ain't using that. I don't trust that. Trust no robot telling me how much money I got, and this and that." But she uses a debit card, all the time now.
Every day, yeah. Or like, I'm not gonna put my information on the internet. I'm not putting my debit card information out there. It's like, all right. So it's funny. All right, man. Well, we didn't have a great chat. We've been on for almost an hour. If anyone just joining, you should really go back and check some of the things. Gems were dropped. Is there anything else? Any last words you want to give the people before we head out for 2023?
Yeah, absolutely. So we talked about a lot of stuff that's going on. And a lot of stuff has been like a negative review of what's going on, but there's always a bright spot somewhere. I think we said it on an earlier podcast. Invest in yourself. Like there's nothing better than to invest in yourself in this time, build during this bear market. So I think 2023 is going to be a really good year if you do that alone. And even if the portfolio is down, if you go up in knowledge, man, you're always going to be able to eat. So I think this is a year for that. 2023 is still are going to be a good year, and it's going to be great for crypto and otherwise in your health, your finances, and I hope in your relationships as well. So I'm looking forward to it, man.
I'm glad to hear it. And I completely agree, right? At the end of the day, you control you, and you can only control what you can control. So for me personally, I went ahead and made my vision board. I got my vision board right up here in my office. I'm focused. You know, at the end of every day, I put out one. I got 1 out of 365. Today will be 2 out of 365, where I put out a tweet. What did you accomplish today? What are you grateful for? What are you gonna keep going doing? So, you know, it's really up to us. We can only control what we can control. So go ahead and get out and control yourself. All right, family. We'll catch you on the next one. Winston, my brother, thank you again, man.
Man, thank you.
Peace.
Peace.